Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. Today's agenda, we'll go through our market update, update our earnings trades, and then Joe will go through some his analysis. So let's get started. All right. So you can see Russell still in a SPX in 4, but NDX just flipped into state 1. That was yesterday. So pie wise, you can see, last week we were 15, so we more than doubled that, over 36. So, we're not technically oversold anymore. So after that ripping rally, I guess, it really took off there. So, that's kind of where we're at, big picture. So let's look at the market pulse here. So this is current state percentages. So you can see, we were up state eights right around 63, and this, came down a lot. So, about, 13%, what I kind of told you guys, just kind of watch those sevens. So those really took off. So, it was a good jump there for sevens. So what we look for is, if this rally is going to continue, for the eights to keep coming down, the sevens, eights going to 7, and then sevens start going to 5. So nothing going on with 5s yet. So that's kind of how we can look for, continuation of this. But I will show some charts with key levels that I think are important. So, but no longer oversold. The new lows have plummeted, obviously, after that big rally over the last week. So let's keep our eyes on that. Nothing else down there. Let's take a quick look at bullish, bearish. All right. All right, well, let's just look at SPX while it's loading. Okay, so one thing I do want to point out, so you can see the high down here, 4393, and that's this where we ran into trouble right here. Back then, that was the 50-day, pretty much right there. But you can see we're starting to get back to that level, and the high. Let me take this tool off so I can look at it. So you can see the high was 4386. Now, if you look at today, the high was 4391. So, I think it's just kind of, this level obviously was a big problem. So I would keep my eye on that. Obviously, if we can close above, this kind of the stop area here, if we can close up here, I would expect transition. If this fails, obviously, back down, you got that 4,200 in the entry price also. But, we're above the 50 and 200 here. So, I think I'd just really be watching, this getting above, closing above, the stop loss, like closing above there would be good, but, breaking a new high, for this kind of like intermediate little trend going on here would be good. So, but, we've been in here a real long time, almost double the average. I guess it got right near the average move, but obviously hit the stops first. So that's kind of the quick there on. Let me pull up the chart so you can see. We talked about getting above. Once we got above that 42, breaking through here, the 50 and the 200. So we're above both of those. So those are now, kind of the support levels that, on the way down, if we do turnover, you got the 42, the tops of 46. So these would be, support levels. Um, the last time, we kind of had pop-ups, little retest, got some support and then broke through. Here it was just resistance, and that's a level I kind of want to point out. So, since this high back here, end of July, we've had lower highs, um, lower lows, lower low, lower high. So we're getting up near this kind of level. Obviously, I think that'd be a nice bullish sign to get above that previous high, and that's let me pull it up here. That 4393. So that's the same one that's in that state four that I pulled up back here. This 43935. So that high um, is right back here. So getting above that, I think would be obviously bullish for the market. And you can see, it's starting to act like resistance. If you just kind of, let me get this, they changed the tools, so I'm not as, the Zoom didn't update and they changed like the annotation tools, so now it's on the side. It's annoying. Anyway, so you can see it's, starting to act like, it's running into pretty strong resistance here. Up in this area, like where it did here, just kind of batted up against it and always close below. So, just be wary of that. If we can get above that, obviously, very bullish. So, all right, so let's clear. It's annoying. Okay, so let's look at the Russell. All right, so Russell here, it's had a nice, kind of average path like we didn't normally do. So, typically, like 20-30% go down, rest go back up. This one has gone back up. Obviously, for this long move, 29 trading days, so over a month, getting above entry price is obviously very important for this move. Right now you got support, kind of minor support in this target 1-2 kind of area. Obviously, very strong support down here, but we are above 17. So we spent a little over a week below 1700. We're back above. Obviously, that's very important level. We're back in this normal range, which we've been in there forever, 19 to 1700. So I think really just kind of watching these levels. And if we look at the chart, let me pull that up. So you can see we ran right into this 50 right here on the third Friday. So the close is 1760. And, I mean, it's basically right on the 50. So then it turned back lower here. So that's what I'd be watching, two kind of levels here. You got, obviously our 17 to 19. So 17 is going to be, support, and see if it can break through this resistance to 50. And then, obviously 200's up above here. So that's the kind of like tight range I'd be watching here. And then, SPX, obviously, got your upside, making a new high. So that's where I think the indices are at. I can pull it out, so we can get a quick look. I don't know why they changed these tools. It was so much better. There you go, 17, 19. So we had our three kind of big moves up above breaks above 1900. So this the third one here. So this one's kind of, I would say, looking a lot like this previous one here. Up, down, up kind of thing. So broke below, broke back up. Maybe we get a little more before we kind of start meandering higher. That's kind of just how it feels right now. May retest that 17, but we'll see. But I'd still think this is the general trend for the Russell right now. Just going sideways and not really any big movements outside of that. So this is the market pulse. Just go back to that real quick. So we got up in the 83, 85 range. So big drop, obviously. We're down to 63. I wouldn't say it's a foregone conclusion, that these are going to cross, but that's something I'd be watching too. Obviously, if these things cross, that'd be very bullish, get a nice bullish run out of there. So, I can't say for certain. I mean, it looks like a nice, kind of straight line down, but this is the way the market's been behaving. It's hard to say any, definitive, certainty. So, I think bullish wise, we had the 10-year had a big drop. We're up near 5. So, reaction from the Fed and a meeting, up here around 5, basically dropped about, 0.5% from those highs. So obviously the market likes that type of behavior. And, if it stays down, and obviously be good for the market. Any lower is good for the market, but if this thing pops higher again, then that's going to be a drag on equities. So Fed meeting, nothing. So over a month away, nothing really priced in, no hike right now. Longer term, I didn't check this out, but seems like it's moving down for more cuts next year. So it's you can just see over here a month ago. So it just moved down probably a quarter point as far as cuts for next year. All right, balance sheet. Continues. They're continuing slow and steady. This as far as the market. I'll pull up the rates here real quick too. I like this one. So 10-year 4.6, 4.56. So not as inverted as before. Still high up here. And we've had a lot of talks about this. So we'll see what the Fed, what the market expects. Seems like right now, I think what's priced in is no more hikes. I think that's where we're in the eventual cuts next year. So that's what the market's, I think, expecting right now. Okay, I had a few charts. So I don't know if you guys saw this Friday. Another bank failed, fifth one in 2023. So we've talked a lot about obviously this is a huge one, but another regional bank. So we've talked ad nauseum about their.
I didn't even hear about it. That barely made the news. I didn't even hear about it.
Yeah. Well, yeah, and I got my ear out for all this stuff. So, Yeah, this one just quietly failed, on a Friday. So most people just gets buried in the news cycle. But yep, another one bit the dust. This one I saw this a tweet. Business people were asking about bankruptcy. So business bankruptcies in US rose 30% in the 12-month period ending in September for court documents. So someone had asked about that, and I keep my ear out for this stuff. Here's another one. This is auto loans. This is by age demographic. So for serious delinquency, so 90 plus days. This is repo man on his way. So you can see these. I like this chart because it goes back. Can I get rid of this stupid thing below? All right. It goes back to, these are years. So this is 08, 09. You can see the spike up here. So, I mean, we're in that neck of the woods as far as some of these demographics as far as car delinquencies. This is, great financial crisis levels, got up six, almost six here. And I mean, we're almost up to five here. So obviously, since here, basically the bottom 22, Q1, everything's just gone pretty much straight up, and that's inflation, killing the public. That's the way I see it. So that was the charts. That's the market wrap. I'll open up to questions, comments. Feel free to unmute and chime in.
I don't have really much to say today. This is like markets are fickle, or more fickle when they're just that's what I would call it, fickle markets. There's nothing that lasts very long. Little runs one way or the other, but they're not no conviction.
Right. Yeah, I agree. And if it's, a headwind to the market, higher rates, balance sheet runoff, you know, um, just team inflation. So, it's hard for the markets, I think, at this point to get super bullish without, the Fed saying, we're done raising, we're going to start cutting. That would be obviously very bullish for the market. Until that time, we're higher for longer, and just, some consumers getting beat up pretty good, I think. So, we went through all those like credit card, balances versus savings. I mean, it's all ugly, for the consumer. And we're a consumer economy. I think 70% of GDP is, this consumer like consumption. I think I don't know. There it is. Savings, personal savings versus credit card debt. Started a little before that 90 plus delinquency chart, but so you can see here is this inflection point here, middle 2021. Not sure what happened there. Is that when the new president came in? Anyway, from there, it's just been real bad. So 90 days later, it's just all kind of lining up. 90 days later, we got the bottom of these, and just go straight up. So that's where we're at. Yeah, I agree, Dave. It's hard to get any conviction with this on where, look at general direction for the market. Anyone else? Nope. Okay, I'll run through the earnings quickly. So those pre-runners, so those are, I don't think I have any. Let me look it up. Let me check the plan. See how many we, so there's no open. We got 12 closed. Squeaked out a profit. $324. This is on closing prices, so obviously live trading would be a little different, but we got 2, 3, 4, 5. 7 wins, 5 losses. Squeaked out a profit. These last couple just bumped us up over. It's closed on first and the third. So let's just pulling this up to see if we have. See if we have any more bullish pre-runners. Yeah, we got, no, those are old. 1023. Yeah, that's it. So bullish pre-runners are done. So not a banner, but at least, we didn't take a loss there. Although it tried. Bearish pre-runners, I think same thing. I think we got another one here. Best Buy. Looks like it tripped tomorrow. I think that's it. So there's only one there. Roku was a profit, so we got one more of those coming. Still got a lot of runners, obviously. Bullish, we got one open. Abbey Bay, that was open on the 30th, so pretty much you can see it's just pretty much hadn't done anything. I've been tracking it. I don't think it's done anything today. Literally nothing today. So that one's still ongoing. We do have a decent profit here. So FTNT closed out, AMD, Eli Lilly, those all closed out within the past week for a nice profit. We got one loss there, the ACN. This is brutal start, but it turned around, so we're up right around 1,000 with one trade, and there's still more of these to come. So that one's up. So 3 up. This bullet bearish runner obviously is not up this minute. 9 open trades, so we got a lot. So obviously, a little down market for a few days would be nice for these trades. So we're, overall, you can see we're down about $729 overall. We got a few kind of bad ones down here, but not huge price moves, but obviously, those aren't looking good right now. The rest are okay. So, but a lot of action going on here. So, like a little downturn market would be nice for these open trades here. The vol rise, I think we only have one. Those other ones kind of filtered out. They haven't been good, but this one has normally been, a decent winner. So I think this one closes out tonight. So Disney, that should be mild, just a little profit. And so non-movers. We got one open trade here. NXPI, so that was open on the 6th before the close, so it's looking okay.
NXPI hit yesterday.
Yeah. What yeah, well, it'll actually look good right now because it's like basically right on the mark, 182. So if it closes here, these strikes are 182.50. So I mean, yeah, the intraday it's just really hard, especially these type of trades. Like you can get real big action. So, yeah, this has been a good one. I expect this to we can close this out today. So
Is that the only one? This is like it's like Vol Crush. What was that category here?
yeah, this is
Not
non-mover. I just put them all in
not mover, but
non-mover.
yeah, it's a sort of a Vol Crush type trade.
Yeah. I just put them together. It's the same type of trade. So I
Right.
screen them, and typically they'll have it'll be in a vol crush and non-mover. So I just group them together. It's less work. Like you can go through, like I share all those docs, um, so I can show you real quick.
I had a little better success with iron butterflies. Did
Yeah,
a few of those and better this time.
this could take a few moments. You know what? I'm just gonna pull it up on mine. So Vol Crush. Yeah, so like if it's the same, I just pull them out and put them all in non-mover because non-mover usually has more. But I'll have like 3 trades here, and they're just also in non-mover, so I just throw them all in non-mover. I already took them out, but you can see like here, like Western Digital would qualify, uh, Fast and Delta, those would all qualify. So these 3, and they're all in the non-mover. So I just, yeah, that's how that works. So good news is the earnings has turned around. Yeah, we were pretty ugly. So that bullish move was helpful. So now, I mean, if we want to be greedy, we'd kind of root for the market to come down, for a few days so we can close out, these bearish trades. So that's what we would look for if we're doing earnings trades. Any questions, comments on that? Thanks for sharing, Sudhir. Okay, well, I'll turn the show over to the main man, Joe.
I don't think that's the case, Josh. You're the main man, that's for damn sure. Thanks for covering all you do. Let me pull up a few things here. So, what a week since our last meeting. I mean, something else. And, as I've said many times, I'm not really a why guy, but it seemed like that non-farm payroll on Friday was the catalyst, to get this market, moving to the upside. And the perspective, well, here's obviously the new homepage, and you can see, we've got a couple different, as Josh pointed out, NDX now state 1, not a surprise, XLK state 1, leading the gang. It's been 2 days in state 1, NDX followed suit the next day. I'll go through, some of those charts, but, and excuse me, it was the 27th, we talked about that 15% tipping point range oversold, and we got back to below 15 at 14.97 on the 27th. And, we're all the way up at 36 at this point. It just speaks to, the breadth of this dynamic rally and the perspective, I'd like to look at is just, how far we moved so quickly. And something that caught my eye that really surprised the heck out of me was, I guess the SPX has been up 7 days in a row, NASDAQ 8, and that hadn't happened since November of 2021. So I thought I'd go back and take a look at the 21 charts to see if there were any parallels and maybe where the market went, what it was doing beforehand. So here we are with the SPX, basically right in the middle here. This is the range where, we had consecutive days to the upside. As we all know, this was very close to the top of the market. In the SPX, it turned out to be, the beginning of January, and then down we went. I'll pull up NDX in just a second. But, what I thought was significant is that, leading up to that consecutive period, we had just an enormous rally, basically, coming out of the COVID lows. So I think this market is very, very different from the last time we had consecutive days like that. Here's NDX, same thing, NDX, it was literally, the high for the markets. SPX, trade to a new high in early January and down we went, same thing. We were just in a monster state one for a long time leading up to this, period where we had consecutive days to the upside, in the November, which turned out to be the top. What I think is dramatically different now, and here's just, the Russell. Josh does such a good job talking about the different levels. As we all know, we trade to a short-term low, below that double low of 1641 that was last spring, trade down to, maybe 1610, something in that neck of the range. As it turns out, and I don't think there's anything real significant about it, but the downside retracements coming out of, the COVID lows to the high in November, which was just above 2200, we were, back down again into a retracement level. We've never gotten close to exceeding a 5/8 retracement of this downward leg. 50% to the downside is just above 1700. 618 retracement is just above 1500. So we basically tested that again. Again, I don't think there's anything too significant about it. We're still in that range. And the thing about this, and I remember, we talked about how, leading up to that false breakout, all-time high in Russell, we just went sideways for so long. We talked about that meeting after meeting. And, just, when you move this chart, Russell just, it's kind of a slow moving beast. But last week, it was not. And haven't had a chance yet. I'm hoping for next week to do some analysis on, where's the market 30, 60, 90 days after you get this kind of move, in the Russell. So, and why I think this potential launch pad is so different from, the 21 period is because, and here we are, here's NDX, 2 days in state one now. As we all know, the market's been in a correction since the end of July. So basically, we've had a 3-month market correction. Pick your index. It was basically either the middle of July or the end of July. We've been going essentially slightly down in some cases, maybe a little bit hard down ever since. And then coming out of last Friday's, I guess, 150K, non-farm payroll number, which moved the sentiment in the bond market. Heck, 10 years now, close to 4 or 5, coming off of just shy of 5. I'd be darned. And we're getting the earnings that, as always, they're beating whatever it is, 75-ish%. And we can never really quantify how low, they have those estimates before they come out. I think headwind we're getting now from CEOs, and I don't listen to many calls at all, but just seeing the headlines, the more CEOs may be talking about, some headwinds ahead with the softening economy. Time will tell. It's going to get back to, earnings again. But my best guess is, with the breadth of last week coming out of a 3-month correction, it's unless something, you get something, crazy happening, in this war situation, my guess is that those October 27th lows are going to be, meaningful lows, as Josh talked about, that SPX level at, the 4386, 4393 level, probably really, really important, to watch. If we can get above that level on a closing basis, my guess is, we'll have another leg to the upside. So, there's NDX. Here is good old XLK. Well, we know about XLK. The thing about it, it's kind of a proxy for Microsoft and Apple. Pull this down a little bit. We had this diagonal line which we broke above. There. I just think that coming out of this 3-month correction, could we back and fill again like we did for the last 3 months? Sure. I just my best guess is that's not going to be the case. Maybe we'll get a little pullback here, and then away we'll go again. Here is Microsoft. You probably saw the headlines. Microsoft basically closed at an all-time high. It's traded a little bit higher, but on a closing basis, you got an all-time high. There's Apple. Actually, let me back up. Microsoft has been, I think it's 20 days, been in a state one. So actually Microsoft, and I guess it's the whole AI thing, Microsoft really has been in state one long before, many of these other indexes, for sure. So it's been a pillar of strength, and therefore XLK, leading as well. Apple in, state three, been there just, 1 day, but, state threes don't last very long on average. So it'll be interesting to see kind of, what happens with Apple. Some of these earnings, and I guess Google was one of them. Here's XLC, the communications index, just went into one as well. Excuse me, average days 59, so a long way to go here with a 10% average move. XLC, just as a reminder, kind of a proxy for Meta, Facebook, and also Google. They're both around 25% of the indexes. Below that, it's the telephone, Verizon, and T-Mobile that are all below 5%. So again, it's kind of a proxy for Meta and Google, which have done pretty well. But this thing sure looks like with any kind of support in the overall market, it'll break out of this range as well. Here's Meta, which I have not their earnings. I mean, obviously it got beat to heck in last year and has been on a run ever since. Kind of been, it's a perfect proxy for this market correction from July to current. Hasn't broken out yet. Awful important one, I guess, to keep an eye on. And just went into state one, a couple days ago. So if that sustains, got to believe that's going to suggest the markets are heading north. Google, talk about a whipsaw on earnings, and there were a couple of them. And it was a big week for earnings coming into the Friday with the non-forms at 150K, and Google, certainly big gap downside on the earnings, and is trying to fill that gap at this point. There were quite a few that had downside gaps, and then the market took off, and real whipsaw. So my guess. And one other thing, just Josh talked about a little bit, bonds, I can't imagine they're going to stay in, state 8 much longer. I mean, we're back down to about 4 or 5, more than 3 times, the average length of time. So I got to believe it's just a period of time before this thing goes into 7, and we'll see what happens from then. So, yeah, my best guess is markets are heading north. After maybe just consolidating a little bit here, and we'll tell. We'll see what some of the earnings bring too. Next week. As far as numbers, we've got what are they? Sorry, not non-farm payrolls, but jobless claims. Tomorrow, and then pretty quiet. On the numbers front until next Tuesday and Wednesday. We do get meaningful inflation numbers with the CPI and PPI. So, maybe we back and fill a little bit until next Tuesday or Wednesday, see what the numbers are, and see whether we're heading north. But that would be my best guess. And as Josh pointed out, I think that 43.90 in S&P is an awful important level. So happy to talk about it if anybody has any comments or questions, or back to the man Josh.
Okay, anyone got anything? for either of us before we wrap it up? All right. Well, thank you guys for attending. We'll do it again next week.
Thank you.
Thanks,
Hi,
guys.
everybody.
Thank you.